Fantastic. Hello, everyone. It is August 20th, 2025. Hello and welcome, and thank you for joining me here today. I am Natasha Tomlinson. I've been a real estate agent, a realtor here in Arizona since 2005. And over the past 20 years, I've seen homeowners in many different types of situations, from soaring equity to devastating financial stress. And if you're here tonight, chances are you or someone you love may be facing pre-foreclosure or some sort of financial hardship, some sort of life change that is causing stress. So I thank you for being here and I thank you for your time. First, let me say that you are not alone. This person, this beloved person is not alone. Thousands of Arizona families are struggling right now. Mortgage rates have jumped up. Inflation has squeezed people's budgets. And unexpected life events like job loss, divorce, medical bills, it can put even more responsibility, more pressure on the homeowner. Okay. So tonight, I'll walk you through the options available to you, the real options for you as a homeowner in the state of Arizona, including some that you may not have heard of before, or you may not have heard of for a while. We will bust some myths, cover the facts, and give you the tools to make informed decisions, right? That's the goal for tonight. Give you enough information to move you further, closer to your decision, whatever that may be. So let's start with, where are we in our market today? It is again August 20th, 2025. We're still in a higher interest rate environment, higher than many of us would like, right? We're hovering around 6.5%. And we have 14 cities of the 29 cities that make up the greater Phoenix metro area. 14 of those cities are in a buyer's market. 4 of them are leaning towards sellers, and the rest are balanced. So what does that mean? Overall, that means that buyers have more leverage today than they have in recent years. More homes to choose from, more competition for those who choose to sell in today's market. And sellers should not expect multiple offers in a weekend. That is unlikely. Combine that with rising foreclosure filings, and we're seeing more stress on Arizona homeowners. This matters for you because the strategy you choose for your home, whether you're selling, renting, restructuring debt, and yes, even considering bankruptcy, all of that needs to be informed by what the market is doing today. So let's dive into the options you actually have if you're behind on your mortgage or if you're in pre-foreclosure. Now, sure you don't want to look at me the whole time. So what I will put in the background here, we have a lot to cover tonight. And what I will put is your market report in the background for you to review as I'm chatting. And from time to time, I'll pause because we're across a few different social media channels here, and make sure that I'm addressing any questions. I do ask that you keep the questions that you have to the end, but I'll do my best. All right. So here we are right now. This is showing the city of Phoenix, and what you can see on the side here is the median list price per square foot. Again, the whole city of Phoenix. The average days on market are climbing, and this is decrease, right? So we're seeing 56% of the listings have had a price decrease. That's what that is. All right. And we're seeing where the median rent is $2,300 for the city of Phoenix. All right. And from time to time, I will switch this out. So you have an opportunity to see, Phoenix, Cave Creek, Scottsdale, Mesa, Glendale, all of them. All right. But anyway, let's get back to our scheduled programming, shall we? Okay. As we talked about those who are behind on their mortgage, those who are in pre-foreclosure, and what the options are for a homeowner today. And the main paths available for a homeowner today. 1, loan modification or forbearance. This is a temporary solution. It is a pause in payments. It is a temporary reduction in payments. It works if your hardship is short term. And the myth around this is that the banks won't work with you, right? And the banks, they don't care about my problems. All they want is their money. And I mean, there's some truth to that. They want their money. Don't get me wrong, right? But the fact is that banks would rather work with you on your payments than to foreclose, because foreclosure is a very costly process. Option two is renting out the property. If your payment is lower than today's rental market value, you can lease it out and cover the mortgage and collect the rent and apply it to the mortgage. There's a reason I said that, right? And this too works well for temporary hardships. You could sell the property traditionally. If you have equity is that difference between today's market value and what you owe on the property, all right? What you would walk away with a traditional sale. Maybe you say, you know what? I don't want to stay in this house. And selling is the option for you. You can cash out, pay off the mortgage, maybe pay off any other debts that you have, and go on your merry little way. And it is a much better option than losing your home. A fourth option would be the instant cash offer. I'm sure you see ads for it, billboards as you're riding down the road. You see the signs in the ground at the major intersections. You see it come across your social media about the instant cash offer, and it sounds enticing. And for many, it is. Investors are out there and they're interested in buying the property quickly, but understand that is investment for them. And majority of the time, they're looking to purchase, do minimal fix up to the property, and put it back on the market. And to do that and turn a profit, they need to buy low. So the chances of you getting market value on an instant cash offer are very slim. All right. But they can close quickly, pretty much guaranteed. It's sold as is. You don't have to do anything but move your stuff out of the property and leave it in broom swept condition. The trade-off of it being faster is that the amount that you walk away with is less. Option 5 is the auction style sale. And that creates a bit of a buzz around the property. And it can work depending on your location, depending on where you're willing to price the property, depending on the marketing surrounding the property. So it's especially great if you need to create urgency and you want to increase market exposure. Another option is seller financing. Creatively financed, seller financing. That would be loan assumptions for, a VA or an FHA loan. It would be an exact wrap, right? It would be a seller financing situation, which is powerful for homeowners with loans that are, that where there's a lot of equity, really is where that works best. Another option is bankruptcy. Chapter 7 or Chapter 13. Chapter 7 wipes out the unsecured debt and may delay foreclosure, but usually it doesn't save the house long term. It is a temporary stopgap. Chapter 13 reorganizes the debt. You can keep the home, but you have to stick to a repayment schedule. So the house and then whatever other debts that you have involved. So that may be something you'll consider. Here's some myths and facts about being pre-foreclosure, about bankruptcy in particular. Bankruptcy means you'll never own the home again is one myth. I'll never be able to buy again is one myth that we hear. And I mean, this process can be very emotional for people. It's your home. It's where you have your memories tied in there, your family is tied in there, and so there's a lot of emotions involved with this type of decision. And the fact is that many people who filed bankruptcy qualify for a new mortgage in 2 to 4 years, and that's totally depending on you and how quickly you're able to pull off debts and how quickly you're able to get out of the situation you're in now, with regards to your finances and new job or whatever the challenge may be, how quickly that challenge is resolved. All right. Next myth is that it is financial suicide to file bankruptcy. And the fact is that for some families, it is a fresh start and it can stop foreclosure in its tracks. Yet another option that does not happen very often, I will say, is this deed in lieu, all right, where you hand somebody the keys and you walk away from the property. It's not commonplace, all right, so let's know that. And then you have your short sale. Short sale is where you owe more than the property is worth today, and you are asking the bank, you're saying, bank, I need to sell this property, and I need you to agree to sell it for less than I owe. All right. Now, your credit will take a hit for that, but it is a much easier hit than a foreclosure. Okay. The foreclosure is the worst. To walk away is the worst. Now, a while back, I worked with a homeowner in Phoenix who thought that bankruptcy was totally ruin her life. And she was terrified. That's what it is at the end of there's a lot of fear around this situation. What are the next steps? What can I expect, in this turmoil? This isn't how I expected things to be. This is not what I planned. And after we went through the facts, she realized that Chapter 13 could give her breathing room. And I referred her to an attorney because I'm not an attorney, right? So she could file bankruptcy. And she kept her home, all right? On the flip side, I have another client, Glendale. They chose to sell traditionally and walk away. And they walked away with $120,000 in equity. She didn't even realize she had that much equity. Both stories had different endings, but both had relief. Let me tell you a little bit about this Arizona anti-deficiency law, right? Now it's time to make a switcheroo. Arizona anti-deficiency law. And also, just to say, these are single family residences, no condos, townhomes, co-ops, manufactured homes are included in these numbers. All right, great. All right, now, Arizona anti-deficiency law Arizona has them, and it protects certain homeowners from being held personally liable for unpaid mortgage debt after a foreclosure. All right. Great. So, what does that mean? It means if your home qualifies, The bank cannot come after you for more money if the foreclosure sale doesn't cover your full loan balance on the first mortgage. You lose the house, you lose the property, but you don't owe any left over either. It's called the deficiency, right? So that's on the first mortgage, on the original loan. It's your primary residence. Those scenarios, anti-deficiency laws in Arizona typically applies. So it depends on the type of property, right? The law applies to single family homes and duplexes. It must be a dwelling, a place for people to live in. The lot size must be under 2.5 acres. And it applies to trustee sale and judicial foreclosures, although trustee sale is the norm, if there's any such thing, the norm for Arizona. It applies to purchase money loans, meaning the original loan used to buy the property. Okay. It doesn't automatically cover refinances, HELOCs, home equity lines of credit, cash out loans. Those might still be collectible by the lender. All right. As always, read that fine print. So when the law does not protect you, or the line really, it wasn't designed for raw land, commercial property, multifamily. It wasn't designed for rental homes or investment property, that sort of thing. It could be applied there, but that you would need to speak to your legal professional to get more information on that. So here's an example, right? Let's say you bought a home in Phoenix, Arizona for $400,000 on a FHA loan, right? You are behind on payments and you lose that home to foreclosure. There's no workout plan. There's no forbearance. You don't do a short sale. You lose. They come after the auction date. Time passes. You didn't make any calls, and you lose the home. All right, and the bank only gets $300,000 from the sale. Right? You do not owe that $100,000 difference to the bank. All right. So, example 2. You've refinanced that same house. You took out cash to buy the RV, to buy the cars, or whatever, right? And then you foreclose. Well, the lender may sue you for that $100,000 in that instance. Example 3. You own a rental condo in Scottsdale. You do not live in that property. You never lived in that property. The foreclosure sale comes up short. Same $400,000 that you owe. It was sold for $300,000. You have $100,000 difference, and the bank may pursue you for that deficiency. Okay, that's when it's time to seek legal advice. So, if your home again is a primary residence for anti-deficiency, 1 to 2 units, sits on 2.5 acres or less, the Arizona anti-deficiency law, more than likely it protects you. All right. If it's a rental or you refinanced, you took cash out on a loan, you may not be protected under the anti-deficiency law statutes. Okay. Now, know that even if you are protected by the anti-deficiency, the foreclosure will damage your credit, and there may be consequences in regards to taxes. So be sure to talk to legal advice and tax professional in this instance. So Arizona is primarily a trustee sale state, and that means a homeowner who falls behind on their mortgage defaults on their mortgage. The lender usually forecloses using a non-judicial foreclosure, a trustee sale. The judicial foreclosure through the courts is less common in Arizona, but it can happen in some situations, but it's more costly to do it that way, right? It takes longer. So the trustee sale is typically the choice, most common in Arizona, because the lender doesn't have to go through the courts and the trustee handles the process, and the homeowner receives a notice of trustee sale after missing payments. There's a minimum 90-day period that the property can be sold at auction. The sale happens on the courthouse steps, or it happens online these days, and the property goes to the highest bidder, which many times is the bank, right? So in a judicial foreclosure, you see states like New York, New Jersey, maybe Illinois, foreclosures tend to take longer, and the process is longer, and it's more expensive to the lender. It requires a lawsuit in court to foreclose, and usually it's pursued if there's a second mortgage, a HELOC, a home equity line of credit, or some other lien involved in the property. The lender wants to preserve the right to go after the borrower for the deficiency judgment, right? So key differences: trustee sale, faster, not involve the courts typically, and typically the anti-deficiency law applies, right? And I keep saying typically and maybe and can, because every situation is different, right? There's no like blanket, this applies to all, okay? So judicial foreclosure is slower. You have to wait on the courts. The lender may pursue the borrower for the unpaid balance. So that's the main differences between the trustee sale and judicial foreclosure. So all of this to say, and to know, to arm you with information, to know that you have choices. The worst thing that you can do is nothing. Right? Okay. Next city. Let's tackle some of the biggest myths that I hear from Arizona homeowners, okay? Well, if I ignore the letters, they'll just go away. Well, no, not going to go away, okay? Well, if I file for bankruptcy, I'll never recover financially. And that's not true either, right? New home ownership is possible. It's possible within a few years. There's some programs that you'll see out there. Buy one day out of bankruptcy. It's possible, but it requires quite a bit of money in order to qualify for those. And if you had the money, you would have been behind on your mortgage, right? Myth 3: I should wait for a miracle. Now, miracles happen every day. Okay, absolutely. But waiting, no, limits your options. Every day matters. Okay, know that. And many think that selling the property means that they failed. And selling, it's not a win, it's not a failure. It's a financial strategy that you're using for yourself and your loved ones, not a failure. You're protecting yourself and your family, and protection is winning. Think of it kind of like you're playing chess. You need to make the next best move, not dwell on the last move. Whether that move is bankruptcy, renting, selling, restructuring debt, what matters is protecting your future. So, what should you do next, right? What should you do next? Come on. Here we are. Well, next, I suggest that we set up a call and chat, because I can talk in generalities all day, but only a percentage of this stuff applies to you and your situation. So let's make sure that we jump on a call so that you know what your options are and you can make a decision based on that. Please do not wait. The earlier you act, the more options you have. Know your numbers. We'll prepare a free home valuation, give you a net sheet, and a strategy roadmap for you, right? And I'll provide you with referrals as well. So for legal advice, for tax advice, so you understand the full picture and what your best course of action would be, right? All is important. Make sure you have the information beforehand, right? Be sure to schedule that free consultation. I'll make sure to include the link in the chat, and then be sure to join weekly. Could do this weekly on various topics related to real estate. It's not all about pre-foreclosure being behind on your mortgage. Okay, there's a number of things happening in Arizona, and thankfully, although the numbers of foreclosures are up, the numbers are nothing in comparison to 2007, 2008, and 2009. Okay. We are a fraction of that. Now, if you're behind your mortgage, you don't really care, what people had in the past. You're having a problem today. I understand that. But just yes, you're not alone in that, but it's not this huge percentage of homeowners that are dealing with this. Okay, prices are not falling from the sky. Okay, so as I mentioned during the consultation, which is free, no obligation, no judgment. All right, I schedule 15 minutes for you, address whatever questions that you may have, see how I can help you, if I can help you, or if there's someone else that I know that may be better suited for you. Okay, and you walk away with information and the best. Take the time to plan out your future, plan your next steps. So I just want you to know, right? Foreclosure, pre-foreclosure, it does not define you. None of these things define who you are. It is a circumstance. It is not the end, a sentence, not a period. It's just a part of the story. You decide how much of a part of the story it is. What matters is moving forward. So I wanted to make sure that puppies around me. I wanted to make sure that I address any questions that may be out there. I'm on Facebook and Insta and YouTube. And so I just want to make sure I address any questions that may be available. So, right? Keep them coming. Send them over. What do we have? What do we have for me? What do we have? Okay. Well, I saw one come across. Let me get to this. Great question. Okay. Can I stop the foreclosure process once it has started in Arizona? And the answer to that is yes. Yes, you can. The timing is critical. And how do you stop it? You stop it by talking to your bank and requesting a loan modification, a forbearance, a repayment plan, by selling the home, by filing bankruptcy could temporarily delay the foreclosure process, depending on the situation. That's how you stop the process. You pay back the money in full, or one of these other options. That's how you stop the process. Oh, okay. Another one. Okay. Can I sell my home if I'm already in pre-foreclosure? Yes. Yes, you can. Many homeowners choose to sell before that foreclosure date. All right. And let's say your foreclosure date is looming, like your foreclosure date is this month. Okay. Right? Because foreclosures happen every day. Let's say we talk tomorrow and your foreclosure date is this month. We'll contact the bank, let them know where we stand, work to get that foreclosure date pushed out, right? Ultimately, the decision is theirs, but that would be the first step so that we have enough time to get them a good, strong offer, right? If selling is the option that you're looking for, right? But yes, if you are currently behind in your mortgage, if you have an auction date, if they posted a notice on your door, you can still sell your house. Okay? All right. And if there's equity, you get that equity. And if there isn't, then we discuss a short sale and what that looks like. Excuse me. Take a sip. Oh, okay. Let's see. Should I ignore the foreclosure notices and hope the bank works with me? No, no, you should not do that. You should not ignore the notices. The earlier you act, whether you're negotiating, you're selling, you're renting, you're seeking legal advice, the more options you have, the earlier you act. Okay. Let's take a look. Do my neighbors know I'm in pre-foreclosure? Not immediately, right? But I will tell you that we have this thing where when you're behind your mortgage and there's a foreclosure date set, you have to provide what's called actual notice and constructive notice, right? So it will be posted on your door, on the door of the property, to let you know of the date and where the auction is being held and all of that, and it will be online as well. All right, so it can show up on some popular websites, and when that happens, it's possible that you could have people knocking on your door. Absolutely. So if your if your neighbors are interested in buying real estate, then yeah, they would know. They would know that you're in pre-foreclosure. I mean, it's entirely possible, but it's not as if your lender is notifying your neighbors. Okay, that's not what's happening. All right. This is a good one. What happens to my tenant if the bank forecloses on my property? All right. All right. So, if your property is a rental, you know, in Arizona, the tenants typically have like 90 days notice before eviction happens. Um, there's some question about that because we don't have the number of foreclosures that we had many years ago, 07, 08, 09. And so I believe it's 90 days that the tenant has. In some cases, the lease is honored, okay? But sometimes these tenants are month to month, after a year, it reverts to a month to month lease. And that's where we run into some issues. So it's important to have a written lease in place. But it depends on the property, whether the bank takes back the property or the property is sold to a third-party investor or something along those lines. Okay. And the tenant would be able to, they would see the notice. I'm sure it'll be posted to the property, so they'll be aware of what's happening. So I'm sure you'll get a call. And then they can look online to see what is happening with the foreclosure date. There'll be a number they can call, and as long with calling you, there'll be other numbers that they can call. Let's see. So let's see. Yes, if you are behind in your mortgage, will the bank work with you? Well, look, lenders offer loan modifications, repayment plans, forbearance, but it's really important to communicate with them, right? The closer you are to the foreclosure date, the fewer options that remain for you. Okay. All right. How long before you lose the house? Okay. In Arizona, I don't know about other states. I haven't done real estate in other states. In Arizona, once a notice of trustee sale is recorded, you generally have 90 days before the foreclosure auction. Okay. So that's a critical window. And I mean, that time goes by quickly. I mean, here we are. I mean, we were just saying Happy New Year, and it's freaking August 20th, 2025. Okay. So, um, yeah, know that it's critical to act. Whatever you decide to modify, decide to request a forbearance, you decide to explore other options, to contact your lender, schedule a call with me, make sure that you know what your options are and to act. Okay, very important. All right, so uh let's see. Does foreclosure ruin your credit forever? No, not forever. But it does stay on your credit. A foreclosure can stay on your credit for up to 7 years, right? The impact of foreclosure is probably the most severe thing that can be on your foreclosure, particularly the first 2 to 3 years. But really, it affects you because you're going to try and live somewhere, right? So now you foreclose the property, you're going to try and rent a property, and that foreclosure is on there. It's problematic, right? So it is it's right. It's not an option. Let's put it like that. Just so many other options available to you. Just should not be an option. All right. Will I owe money to the bank after foreclosure? Okay, so it depends. Now, if this is your home, your primary residence, you live in that home, you bought this house a few years ago, you never refinanced, you never took any money out, then no. Arizona anti-deficiency laws apply. All right. As long as it is single family residence, condo, townhome, and the home sits on under 2.5 acres, anti-deficiency law applies. But if it is a rental property, vacation home, investment property of some land, you took money out to go buy something else, the lender, they may pursue you for the balance. It's a possibility. That's where we have you get legal advice, right? To see what your next steps should be. Okay. Let's see. Did I answer any other questions? You heard bankruptcy always means you lose the house, right? Bankruptcy, yeah, always means you lose the house. Well, that's not an always situation. Okay, that's a case by case basis. It doesn't ruin your credit forever, and it doesn't mean that you're definitely losing the house. Okay. And let's see. Oh, can my homeowners association foreclose on me? I'm behind. Can my homeowners association foreclose on me? It's possible. It's possible. Although recent laws have changed and the homeowners association, they don't have as much power as they once did. But depending on the situation, it is possible that they can foreclose on you. Okay. So keep that in mind. I would suggest being current on the HOA. Right? That's just one less headache. But that's the suggestion. Let's see, just make sure I addressed all questions here. Oh, okay, one more. What happens if my home is a rental? Did I answer that? Yeah, I did. Okay. If my property is in pre-foreclosure, okay, if I'm behind a second home, okay, do I still have options? And yes, you do have options. You can negotiate with your lender. You can sell it. You can explore creative financing options. There are buyers, particularly self-employed individuals, who are looking for a seller carry, a lease purchase sort of situation, that may be right up your alley. But keep in mind that generally speaking, second homes don't have the same foreclosure protections as a primary residence. Okay. All right. Great. What else? How how long do I have in? All right, 90 days. 90 days from the notice of the trustee sale. From the notice that they put in your door, 90 days from that date. Okay. Okay. All right. It looks like I have addressed your questions. Any others at this time? Wonderful. Wonderful, wonderful, wonderful. Okay. Well, I just wanted to repeat a few things here. Remember that pre foreclosure, it does not define you as an individual. It is a situation, it's a challenge that you're currently experiencing, but it is not the end by any means. Okay. And I'd love to chat with you individually and explore the options that are available to you, even if it means you exiting the property and exiting with grace and dignity. Okay. So, regardless of whether you sell, you restructure, what matters is that you make a decision to move forward. All right. So, again, I thank you for joining me here tonight. Thank you for trusting me with your time. I know you could have been anywhere, and I thank you for being here. So, remember that you don't have to walk this road alone. I again am Natasha Tomlinson, realtor here in Arizona, and I look forward to helping you write that next chapter in your story. We do this every week, Wednesday nights at 6 o'clock, covering various topics related to Arizona real estate. I hope to see you there. Ta-ta.